Official data shows that the United Arab Emirates economy has turned around with a strong rebound in profitability and growth. Here to speak about how the financial services industry, focusing on asset management, is growing in this region and beyond, is David Marshall from Emirates NBD Asset Management. Well, David, Emirates NBD Asset Management is the largest banking group in the United Arab Emirates in terms of assets. So what does the investment landscape in the region look like?
To answer that, I'd probably go back about 3 years when stock markets and bond prices were really depressed after the global financial crisis. Then we had obviously the Arab Spring as well, which further depressed prices. At the backdrop of that, of course, was economic growth was coming through. So the green shoots were coming through, government finances were improving, corporate profitability was improving, and we were starting to see strong performance. So you had that kind of investment nirvana, strong growth, strong performance and cheap prices. Since then we've seen a re-rating. That's attracted investors' interest. A lot of international investors are now interested in the region. For me, of course, the game changer was last year, which was the upgrade from Frontier to MSCI status of the UAE and Qatar. And that really forced international investors from being interested to making significant allocations. On the debt side, we've seen a real improvement on the debt on debt prices. Borrowers were really shut out of lending from traditional sources, which was banking sector in the Middle East. So since then, they've tapped the capital market. So you had really attractive borrowers looking to raise money at attractive yields. And again, there's been a re-rating there. So we've seen since the crisis, CDS spreads coming from around the 940, 950 levels down to 150 today.
Well, what investment trends are prominent in the region?
The most obvious one, I guess, would be in financial services, where we're seeing a continuation of the recovery. Again, like most parts of the world, banks were under strain after 2008, 2009. Balance sheets were largely impaired. You had loan-to-deposit ratios, in some cases up to 130%. So you had 130% of loans and only 100% of liabilities. So that was clearly going to inhibit loan growth. Obviously, some of those loans also went bad, so you had provisioning and impairments. Now we're moving through that cycle. So you're seeing underlying operating profits are very, very strong. We think that will therefore come through when provisioning stops, which we think will happen probably sometime in the second half of 2015. Geographically, I think there's some interesting trends as well. Countries like, say, Egypt, which obviously has been under political and social strain. Economically, we think that's going to move through. We've got the elections that just completed. We think that's going to put confidence back into the region, and we expect kind of foreign direct investment to improve. That will spur capex and investment. So we started making investments there last year, defensively, utilities, telecom companies. Now we're moving to play cyclical, so construction, real estate, more investment banking themes. The big one, I guess, though, would be Saudi. I mean, that's the untapped market, the one that all investors want to get into. It's still expensive. You can only do it through derivatives or indirect access. I think if that opens up, that would obviously spur, again, huge foreign investor interest.
Well, Sharia-compliant investing is becoming prominent worldwide. How are you responding to this?
For us, it's always been a really big part of our business. About 30% of our assets are run on a Sharia-compliant basis, so north of 700 million of our 2.5 billion we run is Islamic. We're seeing people starting to tap into that. Even the UK government looking to issue a sukuk. I mean, they're looking to tap that investor base. For me, it's all about investor demand. We're in the Middle East. If you want to attract assets from, say, Saudi, UAE, Oman, even further afield like Malaysia or Brunei, Sharia-compliant products and services are a key part of that. From investor base, what we're seeing is a lot of interest in sukuk. Very, very attractive asset class, which can sit on the balance sheet and just clip out income, so it can optimize balance sheets, Sharia-compliant real estate and cash.
The Middle East has traditionally been an exporter of capital of the world. Do you see similar interest of MENA investments from your international clients?
I think that's changed again dramatically in the last 18 months. I mean, 3 years ago, we were speaking to international investors about allocating to the region. As I mentioned, stock prices were depressed. We thought it was a great entry point. To be frank, they weren't ready. We were too early. There was, I think, for them, too much investment risk. There was too much business risk, and I think possibly at the individual level, too much personal risk. So they weren't ready to allocate then, but I think they very much are ready to allocate now. So we're seeing sovereign wealth fund interest in coming into the region, but we're also seeing the emerging market asset allocators having to buy now because of that upgrade that I mentioned earlier. I think on a macro level, there's also reasons why investors are interested in the region. If you look, emerging markets have really been in the doldrums for the last year to 2 years, and that's driven by currency weakness, weak fiscal and current accounts on the side of the governments, and really slow growth. We don't have any of those problems in the Middle East. We have largely dollar-pegged assets. We have strong growth driven by a high oil price. And that's really going to make a nice diversification play for those emerging market managers.
What trends do you see impacting the asset management industry in the coming years? And with tighter regulation, how do you see that impacting the industry?
Regulation is an increasing part of what we do. There are some trends that I think that are going to help us. We're seeing trends towards outsourcing. We're seeing companies who have sat on assets for years, maybe on the balance sheet, are now outsourcing that to a professional manager. That's a great thing for us. Obviously, we want to capture some of that. But from the regulation side, you can't escape it. We have a regulator in Dubai, we have one in Jersey where we have fund base, we have one in Luxembourg. Anywhere we want to sell the funds, we have to get approval from a host regulator. You can't get around that. Regulators are increasing the capital requirements to make sure that the financial service providers themselves are strong. That, of course, is leading to consolidation in our market, both in the insurance sector, banking sector, and asset management sector. So, as we've seen probably in the UK and Europe, I think the smaller businesses will probably be consolidated or merge with some of their counterparts.
Well, finally, how are you positioning your business in the future?
We've grown our asset by about 100% in the last 2 years. For me, it's less about the amount we've grown, it's about the way we've grown. We're looking to diversify our product range. We're looking to make sure that we reduce some of the cyclicality for shareholder and for our investors. So if we can offer products from real estate to fixed income to equities, that's what I want to do. I want to achieve a diversified product set. Also, I want to broaden our investor base. The market there was very strong on a wholesale basis. I see a lot of growth in institutional investors. So you're seeing pension funds, regional and international. We're seeing the growth in civil service allocation, banks looking to allocate as well. Finally, that international flavour. For me, it's largely untapped. We've only just begun that process. So we've just launched our platform in Luxembourg. That was last year. We're looking to expand that aggressively. So as we move maybe to Europe, Asia, and perhaps even further afield, I think that's where we'll see strong growth in the future.
David, thank you.
Thank you.